Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 28th of November. Starting off with the FTSE 100, and here you can see that after a week of being in a 50-point range, underneath the falling 50-day moving average, now around 74.95, the FTSE has decided to break down, which is rather frustrating. I suppose the positive here could be that we managed to stay above 7,400, the recent support for the market, and avoid a test of that uptrend line from March around 73.05, but with the 50 and 200 day lines both falling, it'll take something special to avoid a retest of the 7,300 area. We've also had an RSI failure in the low 50s, which tends to be actually the worst signal of the lot in terms of RSI. We do break up through the 50-day line, then there's the hope that by the end of the year we could head up to 76.50 in the top of that falling February trend channel, but obviously at the moment we are looking the other way. Onto the DAX, and this has been a star performer, but even here we've failed at post-August resistance towards 16,100, while we're below that looking for a potential gap fill towards 15,700, which was the last gap that we had earlier this month, and maybe even down to the 200-day line just below 15,700, but not expecting more than that on the downside, given the way that both the 50 and 200-day lines are rising towards a golden cross, hopefully next month. End of day close above 16,100, and we're looking at 16,800 in the top of that broadening triangle from back in May. The leader in terms of the autumn rally has been on the US side, and here we have the Dow above the old August resistance, 35,100. The longer we stay above that, the greater the chance of a move to 36,100 at the top of that one-year trend channel by the end of next month, i.e. by the end of the year. We have the 50 and 200-day lines both rising in parallel together, which is very nice to see. And obviously we've come back off a very sharp bear trap at the end of last month. Moving along to Bitcoin, where the possibility of getting to 40,000 plus by the end of this month is diminishing by the hour, but nevertheless still have the chance at some point, whether it's this month or next, for an end of day close above 38,000 to take us into the low 40,000s area. Otherwise, probably we'll need a test of support towards 35 or even 34,000, the current area of the 50-day moving average, the blue line there, which is rising sharply along with the 200-day line. Onto the stocks, and starting off with Alien Metals, which has rather pleasingly hit our target, our previous target there, 0.32 or so. We're looking for an end-of-day close above the 200-day moving average, 0.33, to give us a fresh leg to the upside at 0.43, at that resistance line projection there from June. And the upside value at the moment, while we're above recent support around 0.28, so above 0.28, looking for 0.43 on Alien Metals. A stock which rallied sharply yesterday and has so far not done very much today, but 38% I think we were up on Anglesey yesterday. Surprisingly no RNS, no speeding ticket RNS. Hopefully that'll come soon for the bears in this market, but otherwise we're looking for the top of that broadening triangle there from May, as high as 1.75 pence by the end of next month, while we remain above resistance on the way down around the 1.3 pence level. Maybe you could have to allow down to the 50-day line at 1.25, but ideally we stay above 1.3 pence. British divergence in there as well, so that obviously explains the momentum behind yesterday's move. A stock which I don't think I've ever covered before is DP Eurasia, and here just to show you what a sort of a recovery trend looks like, a wide rising trend channel there from the beginning of the year, the top of the channel there up to £1.20, which I suppose would be hit sometime in Q1 next year. We've had a nice gap through resistance today, and the longer we stay above the 75 to 80 pence band, the greater the chance of a move to £1.20 as soon as the end of in fact, the end of January would be more realistic for that. Onto a stock which has got a rather sheepish signal here. We have Ensilica, which after all its losses through the year has gapped up off the low, which is gives us a suspicion that there is a turnaround coming. The floor of the gap there around 52 pence. Above that we're looking for the shares to at least give us an end-of-day close above the May support at 57 pence and then on to as high as the 50-day line at 65 by the end of next month, or even sooner than that. But early days yet, so still a bit of a falling knife situation. Speaking of falling knives, there have been plenty of falling knives at fusion antibodies over the recent past, especially that move down in May. The current position, though, is that it looks as though we've got a bear trap island reversal, so gapping down to new lows, bear trap there earlier in the week, or in fact last week, and bullish divergence as well. With that island reversal, though, we're looking for a fill of the gap down from 5 pence, 5.1 pence as a target, while we remain above the high of yesterday, around 3.6, above 3.6, looking for 5 pence plus over the next couple of weeks for fusion antibodies, and maybe that island reversal suggests that finally we've hit a proper support level. On to global petroleum, which I think quite chuffed about, really, given the way that there wasn't much to go on in terms of potential turnaround here the other week, but we've hit our initial target there at 0.16. The turnaround signal really coming with the break of that neckline resistance around 0.08. But the current position is above 0.16, but looking for as much as 0.25, which is the May resistance line projection and an upper parallel of that broadening triangle from back in August. And only back below 0.11, really hurting the idea of a sustained recovery of global petroleum. On to Hummingbird, which is still feeling the afterglow of the interview that the company put out, one it did with me last week. Here we've got the rising 200-day line. That's now at 11.6 pence. We've managed to clear that quite easily, and we're looking for 16 pence, hopefully by the end of next month or even sooner. The 50-day line now rising as well. That suggests we're going into a golden cross, and the run-up to a golden cross or golden crosses can be the strongest part of the cycle. So maybe we'll get the kind of move for November, December that we saw back in March, April. At this stage, only well below 10 pence in recent support, delaying the upside scenario. Moving on to Katoro, and here nudging the 200-day moving average. I suspect that's for the first time in a long time. Look back and see. The last time properly was, wasn't even properly, was back in spring 2022, and then a year before that. So a trend change there. We can close above that 200-day line at 0.095, and above that looking for 0.13 by the end of next month. So let's see if Katoro can step up to the plate in terms of recovery within that rising trend channel base. As well as global petroleum, very chuffed about the performance at Novacyt, which was championed after the unfilled gap to the upside last week. Around the low 50s, and we've made good progress since. Looking for up to 90 pence by the end of next month, and obviously the way things are going, there's even a small chance we could get there by the end of this month. Upside value while we're above resistance on the way down around 67 pence. That was back in September. Onto a stock which I normally never cover just because it's a blue chip, and judging by the chart, don't really need a chartist to tell you which way it's going. But wonderful chart there from Royce, and they've had disposal news, etc., today. Moved to new highs, and the recent high, recent resistance, 248. Above that, we're looking for a fresh leg up to £3, maybe as soon as the end of next month. But the unfilled gaps to the upside all over the place here, and that chart in itself is a great charting or technical analysis lesson. On to more mundane matters. The first one is Scancell, and here you can see that the shares have been in a rising trend channel from back in June. Top of that channel around 17 pence, and that's our target for the end of next month after the unfilled gap to the upside. Best case scenario, maybe sometime in January, would be a move towards 25 pence, but at the moment that does feel a little bit ambitious, even though that unfilled gap to the upside so far today is a very strong signal. Finishing off with another stock which doesn't make many appearances here, it is Supreme. I noticed that it's had very good update today. Massive gap to the upside, and rising 50 and 200-day lines, so that suggests that we should easily get up to £1.40 by the end of next month, or perhaps even higher than that, the way things are going. That's it from me today. More updates tomorrow.